Boom. All right, what's going on, you guys? It's Royce Jacob. Welcome back to the channel. In this video, we are going to be talking about how the greater markets are looking especially suspect at the moment. The historically red month of September is holding true to character and creating for what I perceive to be a very sketchy market. So we will be focusing on the chart today. The technicals are looking sketchy at the moment from a short and long-term perspective. And as you guys know, although we aren't going to be looking or reading over any articles today, the macro environment is equally as sketch, if not more sketch, than the technicals look at the moment. And again, we're not looking over any articles, but as we look over the charts and talk technicals, I'll kind of just give you guys my general thoughts on the fundamentals, on the macro. And we'll also take a look at the intro to the newsletter I wrote as well. That kind of covers my general thoughts on the fundamentals more so than the technicals before diving into the charts, okay? So that's pretty much the breakdown, but we'll still quickly go over the names we'll be discussing, how we'll structure the video, and then we'll dive in. All right, so in front of us, TradingView, the usual, you guys know the drill, where we will talk technicals and price targets on the following three names today in this order. Kicking it off with the good old S&P 500 or the SPX. Keep in mind, you guys, I will also be talking about how I'm personally hedging my portfolio. Shout out the portfolio group over the past few days. As I've kind of implied, if you guys have watched if you guys have been tuned into the channel over the past few days, over the course of this 4-day trading week, I have been implying how I feel sus in the markets, how the markets are sketching me out more so than they have been, even in times when I've thought we were going to see pullbacks. This is a crazy looking chart, you guys. We will talk about this long term. Even at times over the past few months when I thought we were going to see pullbacks, I would say right now is the most confident I've felt that we will actually see a pretty significant pullback, maybe even what some could consider to be a crash, especially when stocks only go up. All right. So we'll kick it off with the S&P 500. Not going to be looking at the Nasdaq or the Dow, so not the DJI or triple Qs today. Going to be focusing on the S&P just because I feel like that's the best middle ground for gauging the kind of just sentiment and performance of the overall equity markets. I will talk to you guys a little bit about the VIX, just play that into how I'm hedging my portfolio. Of course, not giving you guys specific positions, but just giving you guys maybe some ETFs, just an idea of how I'm personally hedging against a potential pullback in the greater markets. We got to cover the DXY, because DXY, the US dollar, is the base of macro. If whatever trades against if the DXY is doing good, if the DXY looks good, if the US dollar looks like it's going to perform well, everything that trades against it, which is pretty much everything because that's the global reserve currency, is likely to do poorly or is more, it does imply downside if the DXY looks good, okay? So cover the DXY just because that's a base of macro, and then we will close it out with good old Bitcoin. I feel like I can't do a macro analysis without covering Bitcoin. Been a few days for you guys. Do cover it every day in the newsletter, but on the channel, because we're in a pretty sketchy environment once again, sussy September, I feel it's important to keep you guys posted on my thoughts with Bitcoin. So we will close out the video talking BTC. Before we do that, once again, I do want to read through the intro to yesterday's newsletter. If you guys watched the video I posted last night on SPRT, BBIG, which absolutely crushed it today. Going to be recording a video on Root today after this. Pretty excited for that. I did mention that I would be reading this. I did cover SPRT, BBIG. I mean, we played that freaking great, you guys. Little hand for us. cheers to that, you guys. Love to see it. But I do want to read through this again because I do feel sus on the greater markets. It's Wednesday. This was August 8th, or I'm sorry, September 8th. Where are the months going? Where's 2021 going? But again, this is September 8th, which was a Wednesday. So it's Wednesday, and it sucks to say that I'm not liking the feel of the markets right now. I could act all optimistic and say that I think some of our favorite plays will make a speedy recovery, but that's not the case. Technical indicators are the only way to bring some sense of reason to an irrational environment, and unfortunately, as of today, many of the names I've been bullish on just look terrible on the charts. Long term, of course, I'm still bullish on many of these plays. That said, as a trader, my job is to do my best to optimize profits and overall returns. It's wild how quickly sentiment can shift, but right now, I feel it's a responsible move to shift into a state of more defensive offense. I'm also sitting on a solid cash stack at the moment, guys. Never hesitate to keep some dry powder on the sidelines. Patience pays, okay? So I can't actually say just since yesterday I have redeployed a lot of that capital into plays that today gave me more of a sense of clarity than I even felt yesterday. So that's the nice thing about technicals of just gauging general sentiment, is that with each day that passes, and the closer we get to some of these technical indicators, the more confident I feel in the plays that I've established, okay? So housekeeping before we dive into the charts. You guys, please give the video a like if you just go on to gain value from it today. Just give the video a like. Subscribe to the channel if you've been watching the videos. If for some reason you're not subscribed, I'm trying to get to 50K and it's taking forever. So it would really mean a lot if you guys help us get to 50,000 subs. Make that red button gray. That sounds right. So subscribe to the channel if you're new around here. And of course, if you want one of these bad boys in your email inbox every trading day during market hours with the trades I made, along with the list of course, my entire portfolio, my complete portfolio, every single call option, put option, stock position, cryptocurrency position, broken down in percentages. It's like 50 to 60 positions, if not more, at any given time, which I do update every single trading day during market hours. And again, along with every update, I send out one of these bad boys, explaining my thoughts, rationalizing my trades, just letting you guys know whatever I feel like is important during actual market hours that day. All right, so that is going to be the first link down below. 15 bucks a month or 40 bucks for every 3 months, completely up to you. Do my best to make that worth your hard-earned money, and trust me, I do work hard on it. I grind. So again, I appreciate it if you guys check that out. It really helps me out, and I do my best to help you once again. Obviously, I feel it's worth it, but I'm biased. So again, appreciate it if you guys check it out. If not, no worries. Appreciate you watching right now. Let's talk the SPY. We'll start long term. You can see we're on the daily candles right now. These look like freaking 5-minute candles, but that's just how wild this market is right now, okay? And just how long this bull market has spanned. Over a year and a half already. It's crazy. But okay, so on the daily candles, we'll keep it, just kick it off with how much the stock market has appreciated since its 2020 lows. Okay, so obviously the lows are a little skewed because this was a black swan event. This was a liquidity crisis. Everywhere this is true fear on a chart. Everyone got scared, wanted dollars. That's why the DXY absolutely excelled during this March to April period. Okay. So obviously we saw the flash crash in the S&P. From the bottom of that flash crash to where we are currently sitting, we have over doubled. We're up 105.7% in the SPX. Other like leveraged ETFs that I'm personally playing right now, that I'm personally shorting right now, are up like 6-7x, like 700%, some of them. So that's crazy. But again, I'll kind of talk more about hedges as we talk about the VIX, I guess. Regardless, we are up. We have over doubled. This is the quickest the S&P has doubled in price, I believe, since the Great Recession. Or the Great Depression, I'm sorry. Since the Great Depression, this is the quickest, this is the shortest amount of time that it's taken for the S&P 500 to double in price, which is pretty crazy. But again, after a black swan event, that is no surprise. But even if we go to this peak, where we were at organically prior to that fall, just a year and a half ago in February, even early March of 2020, we are still up 32%, okay? Although the macroeconomics are way worse. Although economic productivity is way worse, although unemployment is worse than it was, we're still 32% higher. And yes, money has been printed. That will forever change. Like, the amount of money that's been printed is staggering. But I don't think that's enough to justify the fact that we're 32% above where we were in February of 2020. Granted, economic output and actual fundamental value and productivity of many of the companies in the S&P is significantly worse than it once was, okay? So you can argue for tech. Tech is obviously accelerated, but many industries, especially like in the Dow, so I would say the Dow is the most overvalued, the S&P is in the middle, and then the Nasdaq still has a ways to go because tech isn't going anywhere, and the pandemic arguably just accelerated tech regardless, okay? So fundamentals aside, let's talk technicals again. We're still up significantly. We're still in what's very obviously a bull market, but I want to come up here and talk a little more short-term technicals because that's what's important right now. So the S&P over the past few days, over the course of this 4-day trading week, has been red every single day. It only makes sense to me that we close out tomorrow with a red day. What I really like to see here, you guys, is that the S&P actually did, the SPX, I'm sorry, did break the significant line of resistance right here, this sign line, touch point here. Did dip below it a couple of times, which creates that kind of lower channel of this line of support. So long-term line of support has been broken. We did close the day below that. That leads me to believe that tomorrow will probably be red, and we will ultimately come to test this line of short-term support using these two touch points right here from July 19th and August 19th. It'd be weird if tomorrow was September 19th, but it's not, September 10th. Regardless, I do think we will go on to test the bottom side of resistance on the short-term support, make our way down. It's like 1%, I believe, to test short-term support. And if we break that, so if the SPY at this point breaks 44.50, if we break 44.50 in the SPX. That leads me to believe that significantly more downside is on the way. If we do see more downside, obviously you guys, just historical ceilings and floors will act as areas of resistance and support. So right there, that's like the first area I'm looking at. That's going to be roughly my first target. And then over here, this previous high before really ripping in early April, and then down here. And that's where like my base target comes in. If everything really comes crashing down, like worst case scenario in my mind, which I mean seems unlikely, but we've seen crazier things happen, you guys, is coming down here to like $3,400. So it's actually going to price range. It's going to be pretty damn similar to that, but just for the sake of it, we'll bring down a price range right here. So from current levels to this base price, so which is the previous high, I'm using my base resistance, reversion to the mean. You guys know I say that a lot around here. Reversion to the mean, or the revisit of the initial high of pretty much the rally, or just the previous high. So in Bitcoin's case, kind of like the 2017 high was the same initial high of the rally this year of 2020, 2021, around 20K. So for the S&P, it would be right here before we fell off the cliff in, once again, like February, March of 2020. That would take us 25% down from where we're currently at. I don't think that's that crazy, if I'm being completely honest. I don't think it's likely, but if we do see it, I wouldn't be surprised. And honestly, my portfolio is structured in a way to where I'm feeling pretty damn safe in the moment. And let me know down below, you guys, if you're hedged at all at the moment as well. Okay, so S&P, you guys, again, just be looking at these levels on the short term. If we close below 44.50, I think significantly more downside is on the horizon. So that's S&P. VIX, not really going to be looking at the VIX, but just know, you guys, VIX, or the volatility index, the CBOE volatility index, is inversely correlated to the S&P 500. If the S&P goes down, the VIX goes up. That's why you can see we're down like 0.5% today in the SPX. The VIX was up almost 5%. The ETF I personally play for that is VIXY. Again, if you guys want to know exactly how I'm structuring those common shares and call options in my personal portfolio, links down below, because I'm feeling very good about that position at the moment. Let's talk DXY and then close it out with good old BTC. So DXY is looking pretty decent at the moment. We have technically set in a higher high. The highest level that DXY has seen was on August 20th, and that was the highest that was the highest level DXY's seen since November of 2020, which is pretty crazy. Okay, so DXY is officially in an uptrend, in a long-term overall uptrend. Short-term, we are I have been eyeballing this channel. Just a couple of days ago, we officially broke back into this channel, which did flip me bullish on DXY, and that was a big reason that I initially got kind of bearish, you could say, on the equity markets and Bitcoin. When DXY looks good, when the technicals all look bad on S&P and Bitcoin, which they still look bad, we'll get into that after, that just leads me to believe, again, as a self-proclaimed rational individual, and again, a guy who just looks at charts all day, to be bearish on the greater equity markets and bullish on DXY. Okay, so right now we are below this channel once again, but the bright side is we have broken this downtrend right here. You can see DXY was in a short-term downtrend. It did break below this ascending channel right here. Pretty significant trend line. You can see this is definitely in play, this trend line right here. Resistance, 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 support. So this trend line is definitely in play. For me to be bullish, I mean, I wouldn't be surprised just looking at these daily Stokes. Also on the SPX, it's important to note that short-term, the daily Stokes did just turn down, which would make me that much more surprised if we don't see more downside. Just had to throw that in. I meant to say that almost up front, but better late than never, I guess. DXY doing the exact opposite. I feel like we're going to reclaim this channel, and I do feel like DXY is once again going to set another high. October 1st, if DXY really starts ripping, has a really good month, the inflation report comes out tomorrow, I think that could be sketch. I think that could catapult the dollar just because there's so much freaking rampant capital out there. Always remember, you guys, this is my opinion. I could be completely full of shit. I could be wrong. But DXY just looks good. The equity markets look bad. Those two catalysts lead me to believe that the dollar will perform, and therefore I do think the dollar will see new 2021 highs, new 2020 and 2021 highs, actually. Well, actually, no, not. Actually, it would come and match kind of the September 2020 high. So exactly a year ago, that'd be interesting if we can fully play that out and see exactly 1 year. 1 year from September of 2020. That same high. Okay, so that will be interesting to see what happens here, but as of right now, I'm personally bullish on DXY. Let's take a look at Bitcoin to close it out. Bitcoin just still looks bearish, you guys, and I still think that more downside is ahead personally. Just again, observing this market for so long, for years, just looking at this market being so emotionally attached to this market, honestly. Not so much anymore, because now over the years you just become more objective. That's just the game. You develop calluses and things hurt less, and things don't feel as good, honestly. So anyway, it's very rare, almost never. I cannot recall a time where we haven't seen a big move down like this, followed by exactly what's happening right now, and then another big move down. So big move down, little dead cat bounce, sideways price action. People are a little scared, and then we usually see another pretty significant sell-off. Okay, so volume is still looking very weak, which leads me to believe that more downside is definitely ahead. And honestly, you guys, I think this previous line of support, of resistance, is going to come into play as new supports. Let's take this to October 1st if Bitcoin really starts to fall. I honestly think this is kind of possible, you guys. But just know over the past few days, I've been liquidating my positions, and I'm excited to have some dry powder at the sidelines to reinvest and get more BTC, more ETH, more Chainlink than I previously had. Okay, so I do think that Bitcoin is going to come down to test this previous line of resistance as new supports. Really kind of the line that Bitcoin broke when that triggered me short-term bullish, that led us to this beautiful ascending channel that we have now broken. Lines of support have both been broken. This beautiful ascending channel is broken. We broke this previous resistance, new supports. Again, it makes sense at the very most that maybe on this little dead cat bounce we come up here to test this just test this trend line in general, which would bring us to just above 47k, so nothing exciting. But maybe we test that, and then I do think ultimately we will be making our way down to test this significant trend line right here on Bitcoin's overall downtrend since it's high in mid-April. And that would take us October 1st. That would take us to $31,000 per BTC. And of course, if Bitcoin falls, then the rest of the market is likely to fall as well. But corrections present opportunities. You got to be a shark, and that's just the game, all right? So adapt or get slapped. I'll keep saying that over the course of this bear market. But again, we'll see if this plays out. Could be completely wrong, but please let me know your guys' thoughts down below so we can chop it up and agree to disagree in certain situations, okay? So that is the video, you guys. I hope you enjoyed it. Once again, if you're still watching, I appreciate you lots. Subscribe to the channel if you're not already. Like the video, and I'll catch you guys downstairs in the comments, all right? So until next time, always remember, take action, make waves. Peace, guys.